been 66 days since the US-Iran war started on February 28, 2026. What started as a regional conflict between Israel and Iran has actually escalated, cutting world oil and gas supply by almost 20%. Let's unpack the implication of all of this for the global market. Geopolitical tensions continue to remain as the main talking points for the month of April. The month started with risk-off sentiment as investors sold riskier assets for safe haven assets. What we also saw was that SSA markets started to reprice higher as yields inched up. In the second week of the month, we saw President Trump announce a 2-week ceasefire agreement with Iran for them to be able to have a negotiation. This was taken positively by the market as investors started to adopt a risk-on sentiment. We saw equity prices rise to very high levels over the course of the month. A couple days after, President Trump also announced that there will be another 2-week ceasefire between Israel and Lebanon. This was also taken very positively by the market, and we saw global equities inch up to all-time highs. In the same vein, the SSA Eurobonds market also inched up as we saw investors buy all the riskier assets. If we take a look at what this means for US inflation, we saw that US inflation increased to 3.3% versus 2.4% the previous month, showing that rising energy prices remain a concern for the global markets. Now, let's tie all of this back to the local scene. Nigeria's headline inflation rose to 15.38% as of March 2026 versus 15.06% in February 2026. The major reason for the uptick in inflation can be attributed to higher energy prices as well as higher food prices from the global war that we've seen between US and Iran. For instance, we saw that PMS was actually at 1,000 to 1,200 naira per litre, but that increased to almost 1,300 to 1,400 per litre over the course of the month. Now, even if we break it down from a month-on-month perspective, we saw that core inflation grew by 4.18% versus 2.01% in the previous month, whilst food inflation grew by 14.31% versus 12.12% the previous month, all showcasing the increase and inflationary pressure Nigeria faces. To mop up system liquidity, the CBN conducted 3 or more auctions, selling a total of 5.8 trillion versus the 1.8 trillion that was on offer. We saw that subscription was as high as 6.5 trillion, which shows the healthy appetite from FPIs and local banks. The maturity for the OMO bills were September 2026, and we saw that the stop rate was 19.91% for all 3 auctions. In the Nigeria Treasury Bill space, the DMO conducted 2 primary market auctions, offering a total of 1.45 trillion and selling 1.6 trillion in the month of April. If we look at the total subscription, which was 5.3 trillion, it shows that investors, particularly asset managers and pension funds, were comfortable buying at above 16 levels. At the last stop rate, we saw the 91, 182-day and 364-day papers close at 15.95%, 16.19% and 16.199%. For the 16.199%, that's an effective yield of 19.33%, which shows that investors are comfortable at this level. At the April bond auction, the DMO offered 2030, 2032 and 2035 bonds, offering a total of 700 billion, but only sold 277 billion across the 3 tenors, with the stop rates being 16.3% for the 2030s bond, 16.5% for the 2032 bond, and 16.59% for the 2035s bond. Even though the DMO undersold by a lot, we saw that reaction in the secondary market was bearish as market participants expect that the DMO would need to come back to the debt market to raise the deficits for the year. In May, we expect global investors to pay attention to what's happening on the oil war and if the peace agreement sent to the US will actually bring about a long-lasting solution to the war. On the local side, May is going to be a very liquid month with a total of 9.48 trillion expected into the system from coupon payments, NTB maturities and OMO maturities. On the back of that, we expect CBN to hold rates steady at the MPC meeting and also be looking to mop up liquidity via the open market operation OMO bills in the month of May. In terms of inflation, we expect a slight uptick again on the back of the higher energy prices that we saw for most part of the month of April. And we think that investors will demand higher yields on bond auction in the coming months. In terms of Treasury bills and OMO bills, seeing as market is very comfortable at 16 levels for Treasury bills and 19.91 levels for OMO bills, we expect that will continue to happen and rates will remain steady for most part of the month. FSDH Metro Bank is a one-stop hub for integrated financial service solutions. Our services span across corporate banking, business banking, fintech business, global markets, correspondent banking, and specialized sector expertise across agro-allied, energy, healthcare, and value chains. We also provide tailored services for high net worth individuals through our prestige banking offering alongside global custody solutions. Are you looking for expert guidance on any of our services? Click on the link in the caption to indicate your interest, and one of our experienced relationship managers will be in touch. My name is Adiola Aremo, fixed income dealer at FSDH Merchant Bank. Together, we achieve more.